Many thanks for joining this week's episode of CRB 101. Kama kawaida, you are hanging out with me, Alan Omondi, and this got to be one of the special episodes of CRB 101. I'm going to tell you why. I am privileged to be hosting Metropol CRB's CEO, Mr. Gideon Kipyakwai. I am sure you've interacted with him a lot on other platforms, but today he puts aside his busy schedules and come to our show. So just we got to talk about the credit market. So thank you very much for joining us. If you are here on this live already, please do us a favor. Just copy the link, share it with your friends and relatives because we are about to learn loads and loads of things. We know that credit reference bureaus play a significant role in the credit ecosystem, really, right? Now, how do CRBs influence the ability of borrowers to access financing from the credit providers?
Thank you, Alan. Before 2007, there were no CRBs in Kenya. And think about it. If a friend comes to you today and says they want 10,000 shillings, would you give them the money?
I think depending with how I know them.
Okay, let's take a stranger. If you're walking on the road and a stranger comes and tells you they need 10,000 shillings to start a business, would you give them?
Definitely not.
Why not?
Because I do not know them.
Absolutely.
Yeah.
So from a financial access point of view, CRBs have really facilitated the engagements between borrowers and lenders.
Okay.
It was very difficult for lenders to understand the borrower. So there was significant opaqueness. And before CRBs, financial inclusion was in digits of 20s. So we talk about people who would be able to access credit from formal financial sector players being 2 in every 10. Today, Kenya is talking a different story.
Yeah.
We're talking about 80% access to credit and access to financing.
Okay.
So it's really a success story that courtesy of CRBs, we have midwifed a lot of transactions in terms of lenders being able to appraise borrowers and borrowers being able to approach lenders and ask for facilities. Now, fast forward a bit to 2011. There were no digital credit providers.
Yeah.
So to get a facility, you needed to physically walk to a brick and mortar space and fill up a form and so forth. Today, the digital credit market disburses close to 5 billion daily. From 0 to about 5 billion daily.
In a day.
Now, the mechanics of disbursing that money takes, I would say, 3 players. The first player is a financial institution. The next player is the mobile money. And then the most critical player is the CRB, which is able to then do creditworthiness checks and do capacity of the borrower assessment. So if you think about the 5 billion being disbursed on a daily basis, we are at the core of those transactions. And I think CRBs and Metropol in particular has really been very transformative in facilitating the growth of the credit market.
Okay. You've talked about 80% access to credit in the right now as we speak, and you've also just mentioned that there's 5 billion disbursed per day. We are going to talk about financial inclusion in a bit, but I am sure that there are strategies that are most effective which position both lenders and borrowers in making sure that the financial industry stays afloat. Would you comment about that?
Yeah. So we have enabled or unlocked financial access.
Yes.
But there's a problem now. It's financial health. So while we are talking about over 80%, 84% financial inclusion, there is a number that has come in that is not good. It's called financial health. And Alan, you are doing very well with financial literacy.
Yes.
So in financial health, a lot of people, because of this convenience of accessing credit, have had a chance to borrow.
Yes.
But a lot of them have borrowed without understanding that this money attracts interest and I have to pay back.
Yes.
So now let me give you some of my ideas about how to remedy this. So this is financial literacy, like what we are doing in CRB 101,
yes.
What we are doing in the CRB Mtaani.
Yes.
We are also supporting lenders through credit community workshops.
Yes.
where we are asking lenders to really spend time to interact with CRBs to avoid loan stacking. You should be able to see your borrower and check, is this borrower borrowing from me to repay another institution, or they're really borrowing to take it into production.
Okay.
This information CRBs have. So borrowing from Peter to pay Paul eventually catches up. It's a snowball. So this is one of the strategies. So lenders have to make sure they're checking the CRB of their customers and supporting customers in the sense that they shouldn't give customers loans beyond their capacity. You can't give a student a 1 million loan. They will go entertain themselves, unless they can demonstrate that they're doing this for business. Now, that is on the lender side. So strategies for the lenders is spending time to understand your borrower. On the borrower side, we are enabling them to all the time look at their credit profile, because this is now currency. I can tell you, Alan, that Kenya is now at the first world or developed world status in financial market maturity, because now credit score is currency. You have seen in the newspapers, lenders are now putting notices to say your interest rate is now risk-based, and that there is a variable rate out of your risk premium.
Yes.
So if you don't manage as a borrower, if you don't manage your credit profile, if you don't get to know your credit score, you will end up not accessing or being removed from the credit market, or paying way more interest rate than other people. Because now interest rates in all banks, and this is common knowledge, is now risk-based. This is the apex of maturity of financial market. Financial markets allocate resources, allocate capital based on risk. And so if you are high risk, you will pay more for you to get access, for you to be able to compensate the lender for that risk that you might not pay. So for me, if you ask me the two things, number one is lenders must at all times understand their borrower with respect to how they are behaving in the credit market. And you as a borrower out there, you should know your credit status, your credit score. And to do that, as Metropol, we have enabled very convenient channels. *433#.
Yes.
We have enabled an app, Crystal Ball app. We have a call center that you can call and have discussions and repair your credit. We have agents throughout the country that you can walk in and get supported. So these are all things that borrowers need to take advantage, so that you don't end up not accessing credit or your limit being reduced. Let me tell you the consequence. Somebody who is borrowing at 14% and another person who is borrowing at 25%, the two loan interest rate regimes translates to two things. Number one, if you have the same income, you most likely almost only get near half. So for you, Alan, if you, and say we are earning the same salary, and because you have failed to manage your credit score, you are being charged 25 and I'm being charged 14. When you go to the bank, from the amortization schedule from the bank, you will realize maybe you will only qualify for 500,000 and I will qualify for 1 million. So then I will be able to buy that car, take myself to school, and you will be limited. So if you are buying cars, you will buy a way cheaper car, buy an expensive car, etc. From a loan repayment perspective, if, for instance, we take the same loan, 500 each, you will pay probably 60,000 and paying 30,000. So the consequences of not knowing your credit score are severe, and they impact your purchasing power and the amount of money in your pocket.
Thank you very much, because in the recent past, we've talked a lot about the risk-based pricing. And it is so good that Mr. Gideon has come to the show today, because he has vast experience in these fields, and you have clearly articulated how a credit score can impact someone's ability to get a loan. And I know we've also talked a bit about trends and how these trends can affect credit scoring and financial inclusion. I don't know if you want to add more on that, but back to the 5 billion that is disbursed a day, that's a lot of money. And I am sure that there's also a big number of people who default, right? As a matter of fact, in April last year, 2024, the non-performing loan ratio in Kenya's banking sector reached 16.1%. Now, in your opinion, what factors do you believe have contributed to this increase, and what strategies should financial institutions adopt to manage credit effectively?
Yeah. So actually now this year, that number has gone to 17.1%. So it's
Gone
even
up.
going up.
Yes.
But you need to disaggregate that number. So that number, we need to break it down per sector.
Yes.
Not all sectors have the same NPLs. For instance, what you're talking about on digital loans is one of the sectors with the lowest NPL. Personal loans have the lowest NPL. Loans to trade have lower NPLs. What we are seeing as having serious NPLs are the asset-heavy sectors, mining, real estate. And those ones, the fundamentals there are a little bit complicated. For instance, on the real estate space, we know what the affordable housing is doing to disrupt that market. Number two is that space has a lot of, it's not competitive in the sense that if you take a loan from a bank to build an apartment, you are possibly competing with people who have money from other sources that are not interested in huge returns. I do not want to mention particular segments of our demographics, but there are people who have money and are just using the real estate to launder the money. So if both of you are competing, when you finally produce your product, which is a 3-bedroom apartment, somebody is selling at cost, for instance. You have taken a loan, you build the house, you want a return, you float at the right price and you don't get a buyer. So we get a lot of the real estate loans going through problems. The affordable housing has come, and the scale of affordable housing is massive. It's also affecting in a way the real estate market. So the fundamentals around some of the sectors that have very high NPLs require investors and entrepreneurs to reconsider and to change that. So it's fundamentally not necessarily a character issue. At the CRB, we look at character. So personal loan, the space, we can tell you the aggregate NPL is about 2 to 3%, which is a very good thing from a scoring perspective. So as a CRB, there is where we can demonstrate our impact, because we are telling the lenders to choose the following customers whom we have scored, and really when they choose those customers, you can see that we are able to predict that these customers are good customers, and eventually they turn up to be good customers.
Since we just talked about the scoring perspective, what trends are shaping the future of credit scoring in the country?
We have now ability to access a lot of data points.
Yes.
Not just credit transaction data. So we are able to have a lot of data that is enabling us to understand the borrower better.
Yes.
For the credit market, that is phenomenal. It's phenomenal. So we're no longer having cases of information asymmetry in the big way that it used to be, where, for instance, a business keeps 3 records, they keep one for themselves, which is accurate, but when they come to the bank, they inflate the numbers. When they go to KRA or other entities, they deflate the numbers. Now, even at a personal level, now we are able to see, because when you interact with all players, we are able to get those details and understand, analyze, and do proper analysis to be able to understand who you really are with respect to credit, your capacity, and which is your ability to repay whatever you want to take, and your character. So what trends are we seeing? We are seeing inclusion of different data points and data sets in the scoring. We are seeing use of machine learning algorithms. So the regression analysis that was in the past used was logit, was linear regressions, simple regression models. But right now, with the AI tools, we can do ensemble, complicated analysis to be able to come up with a good model. So we are saying that better scoring is coming in courtesy of data and courtesy of tools that are able to handle large data and churn out scores that have better performance.
Thank you very much. Now, The government has come up with some initiatives to cushion mwananchi wa kawaida. And I'm talking about funds like Hustler Fund and Youth Fund. How effective do you think such initiatives are, especially just to improve credit access for low-income earners and normal mwananchi?
Okay. So let's step back a bit. You want to start a business. Where will you get the first set of money? So there are a couple of options. You can go to you bootstrap from your own savings.
Yes.
You can go to your uncle, your parent to give you money. And those will look at you and say, okay, this man seems responsible, etc. But also now, the government is coming in to bet on you. So in terms of starting, usually lenders, formal lenders, are not comfortable giving money for starting.
Yeah.
Commercial banks generally suffer.
Yeah.
So generally, commercial banks give money to proven cases. You must have started, so you need money to scale up, to grow. Your model must be proven, tested.
Yeah,
but they have established. Yeah, so they can assess.
Yeah.
I remember when I worked in the bank 18 years ago, and I was in corporate banking. Really, what we look at is historical performance. So when you are starting, there's no historical performance.
Yeah,
so you are dead on arrival. You just come to the desk, and we ask you, where is your balance sheet?
Yeah.
You give us your 3 months statement. You give us 3 years financials.
Yeah.
So government, these projects and the development finance projects by government are really important because they have a very high risk appetite. Government is okay to lose money. The Hustler Fund it's okay for Hustler Fund to lose money. Now, but for you as a borrower, I want to warn you, the Hustler Fund now, the new CS, has committed that the Hustler Fund will participate in the credit market ecosystem. So yes, the Hustler Fund is betting on you, it's giving you money to start, please make sure you pay. The Youth Fund is giving you money, please make sure you pay. Because now that currency that you bring to the credit market is the current. So now another bank will be able to see that you actually took a fund that from a moral hazard perspective has a high moral hazard risk, and you repay it, so you are really a good borrower. So a good borrower in the Youth Fund and the Hustler Fund is definitely going to be an excellent borrower in the main credit market.
And since I know most it's mainly the youth who consume such products, and I just want you to give a comment on how that can be dangerous, especially on someone's credit score, because I know sometimes there is a high appetite for credit. Today is Friday, for example, and we are getting calls from our friends and they're like, where will you be in the evening? I don't have anything, right? What do? I just pick my phone, Hustler Fund, get a 5K, and get another from another app, So I know many youth borrow for all the wrong reasons. And most of them do not even know the effect that has on their credit scores. What can you comment about that?
This number that I told you, 17% financial health, is a number that worries me as a person.
Yeah.
Because this is a problem we have created as a CRB.
Yeah.
We have supported lenders to be able to lend conveniently, with dignity. So we've opened a lot of pipes. What we need to do, and this is what I said, Alan, you're doing a good job, is financial literacy. We have to educate our youth that you can't borrow to gamble, for instance. You can't borrow to support a lifestyle that is not realistic. I know there is a lot of showbiz lifestyle today. I want to encourage our youth that showbiz lifestyle is not real. A lot of what you see are probably historical posts.
Yeah.
So don't try and catch up with something that is fake. Borrow to start a business. And today you have such an excellent opportunity as a young man in Kenya to start a business. There are so many industries that have just come up. Think about, for instance, e-hailing services. 10 years ago, it was not a reality. E-commerce was not a reality. Manufacturing, government has a lot of facilities that give youth access to go and do bottling of their product, packaging. On a per unit basis, you don't have to invest in capex. You can do so many things. Borrow, generate income, and then now you can enjoy yourself. Don't enjoy yourself with a loan.
Yeah.
It's so important. I want to plead with you. As a CRB, we have supported the economy to unlock access. Today, the problem is not access. Today, our problem is financial health. It's over-indebtedness.
Yeah.
It's having too much in amounts that you owe. And we want you to focus on that as a person. Please, your credit worthiness is so important for your future growth. And then I want to point out, Alan,
Yes.
that our youth have to have a growth mindset. It's not subsistence. Don't focus on only living today.
Yeah.
Let's have a growth mindset. Let's think about 10 years. Let's plan for retirement. I read somewhere that we have only 4,000 weeks to live. So every week is significant. If you waste it, it's gone forever.
Yeah.
You know? So I want to encourage our youth that time is your greatest asset. Today, you have a lot of time ahead of you. Use that time to grow yourself. Don't just focus on consumption for today. Don't make yourself happy today. And then you, first of all, if you make yourself happy with debt, remember, you are creating, every time you create a high in terms of your cash flow, when you borrow, you get money that you didn't have. Remember, you will have to eventually go a low. So next time you get money, you will have to repay.
Yeah.
So you are creating a low in the near future. And that low is way deeper than the high you got. So you took 10,000, you will have to part with, say, 12,000.
Yes.
You now take 15,000, you have to part with 20,000. So you're taking a small high for a very deep low.
Yeah.
Think about it all the time before you take a loan. Let's use the financial access that the economy has created to our advantage.
I'm not even going to add anything on that. We are still live on CRB 101. If you're joining us for the first time, we are live on Facebook, Metropol CRB. We are also live on X, Metropol CRB. You can get to watch this episode later on our YouTube channel, Metropol TV Kenya. And of course, we are still hanging out with Metropol CRB CEO, Mr. Gideon Kipyakwai. Now, let's talk about the credit referencing industry in Kenya and in Africa. How can you describe the state right now?
We have such a big opportunity to transform Africa.
Yes.
CRBs and the data and analytics services is transforming Africa in a big way. I can tell you that, for instance, the story we've been talking about in Kenya, the boost in financial inclusion. Look at what has happened. Now an SME can take up to 3 million without having to carry a pack of documents, a logbook, just using the soft collateral. That is supporting growth of enterprises in Africa. Now, we are working on policies to support transfer of data across borders. You have seen a lot of financial institutions that are Kenyan having gone to 6, 7 other countries. There is the African Free Continental Trade Area.
Yeah.
We have East African Community. We have a lot of things that, to working together as Africans, for Africans, we can unlock our potential. Capital is important. It's very important. CRBs then midwives opportunities for entrepreneurs to access and ideas to be funded with capital, either private equity, venture capital, or even commercial loans and other debt instruments. So this is what we are here to do, to facilitate access and financial inclusion and risk management in the continent that for a long time has been left behind by lack of supportive infrastructure like this. So this infrastructure, I'll give you, for example, in Nairobi today, we have about 7 or so million people reside in the Nairobi metropolis. All these people need all kinds of services. Think about the number of shirts they are wearing.
Yeah.
Think about the number of cabbages we are eating. Anything. Just think about water. Anything. All that requires some entrepreneur to get into the space, create convenience, deliver the product, solve a problem. And sometimes we have that idea of how we want to deliver this product, but we have no financing. So we are here to find a way of bringing the financing through information, through identifying you as an opportunity for this lender to then get to you, using data and analytics.
I must say that I was having the same conversation with the CEO of Kenya Association of Manufacturers not so long ago, and he had the same sentiments as you. Means that the ceiling is about to be broken. But let's talk about credit information sharing as well, because CRB, we partner a lot with credit providers. So I know that there are some that have not partnered with us yet. Would you kindly talk to us about the benefits these institutions get when they partner with CRBs?
So from 2013, the regulations allowed for non-bank, non-CBK regulated entities to participate in the CRB credit information sharing mechanism. And as a bureau, we stepped forward and have onboarded or sponsored a lot of the trade, for instance, suppliers.
Yeah.
People are giving out goods on credit to come in and what we would call list their customers, give the customers so that information is useful in their scoring. But also it helps them to collect, because if somebody you have given goods on credit decides to run away, then if they go to a bank, the bank will be able to see them and they will tell them to come and pay you. So I want to encourage owners of businesses, digital credit providers, that when you come to the CRB and partner with CRB, as Metropol, we will make sure that you benefit from this great value that sits with information and data. The great value we have is that we understand customers from a 360-degree perspective. We have profiles of over 23 million individuals in Kenya, 23 million people. We have profiles of close to 1 million businesses. Those profiles you can use to grow your business. Because now, by analyzing and getting the analysis of that borrower, you can decide to give them goods on credit, services on credit. And after you give them services and goods on credit, you give us that information. That information will help other borrowers and other lenders to make decisions on the same person. And with that kind of ecosystem consortium, the borrower will not run away. So we support your growth. On sharing data, this is a free service. All you need to do is be vetted by Central Bank. We will support you in that vetting, and you immediately come on board and you participate. Get these insights to grow your. I want to tell you, you will grow your business, and then you will be able to manage now the defaulters, the bad debts that you have in your book.
And credit information sharing mechanism is evolving every single time. Are there any trends that you foresee in this evolution?
We are those trends don't just come. We are working on a new future. You know, the future is created by people. You know, we create policies, we create industries, we create businesses. All the things you see, including this furniture, somebody conceived it in their mind and somebody created. Now, from a policy perspective, what we are looking at in the near future is moving from credit information sharing to information for credit. So we ask ourselves, what is the information that is required to make a credit decision? Can that information be available to all the people who want to use it? So open banking and sharing of bank statements, for instance, is a reality that is coming. So if you go to a bank and they tell you to provide 6 months bank statement, that's a very rudimentary manual process. We should be able to just click a button that gives consent to your bank A to transmit your entire bank statement to bank B, which is processing your facility. Your rental data, your location data, where you live in terms of residence. A lot of that data can be so useful in terms of your scoring you, understanding you for credit. So we want to unlock additional information value that is so useful in financial inclusion. So I can tell you one of the emerging issues is the use of alternative data in scoring. And you know what we have rolled out, Agroclimatica, where we are using satellite information. We are using soil information. We are using weather information to do scoring of ability of a farm and a farming activity to generate a good yield. So either crop or livestock. And now we are enabling lenders to then assess both the farmer from a credit scoring perspective, and do they have the character to pay, and also the activity they are engaged in, which is planting potatoes in Nyandarua or in wherever, going to yield, to have yield that will enable payment of that loan. So now we are supporting potentially over 6 million farmers through
Yes.
partnerships that we have,
Mm.
so that these smallholder farmers can then access loan facilities
Yeah.
based on the ability of the farming activity to generate cash flows.
Mm.
You're planting tea, can that tea farm become a profitable agribusiness, which can be funded by a bank and which you will be able to repay from your tea or coffee or macadamia or cabbages or tomatoes or anything.
Yeah.
So that requires scoring. So the new trend is on incorporating alternative data for purposes of facilitating new segments, new customer segments to access credit.
Thank you very much. Now, if you have any questions, what you need to do is just to type your question on the comment section below. We'll be more than glad to answer all your questions. Just type them here on Facebook, Metropol CRB, or on X, Metropol CRB. But Gideon, even as we finish, Cristobal. Now, this is a Metropol's product. Cristobal is celebrating its 10th year since inception. Please take a few minutes to walk us through this journey, how it has been.
Wow, this is, we are really, really happy that Cristobal has come of age. Celebrating 10 years is a big milestone. Cristobal is dedicated to you, the borrower, to be able to interact with your own profile in the CRB. So you don't need any middleman. You come to Cristobal, *433#. You go to Cristobal app, put in your ID, register, and once you have access to that platform, you can see what is in your CRB profile. We have done this for the last 10 years, and that's why we're celebrating 10 years. The access to CRB profile by borrowers, is what has driven a lot of the financial inclusion we are talking about. It is what is driving financial literacy. People knowing their credit status, people knowing your credit score, you knowing who has listed you, you knowing what are the interest rates and the repayments and the outstanding balances that sit in your CRB, has enabled you to then make better decisions. So as Metropol, we are super excited that we are celebrating this 10-year anniversary. We will be coming out to different marketplaces. You will see us a lot in the digital space, supporting this financial inclusion discussion, supporting responsible borrowing, supporting financial health, and increasing the ability of you to access credit, to boost your purchasing power, and to grow your business and grow yourself. So we are super excited, Anna, that this year, 2025, is a very nice and beautiful year for us at Metropol and for our customers who have been using Cristobal.
Thank you very much. Thank you very much, Gideon, for your time. I'm going to allow you to leave because you need obviously to attend to other things of the day. So we thank you very much for keeping us company since we started the show up until now. If this is your first time, we do this every single Friday of the week. Where to find us? Here, live on our Facebook page, Metropol CRB, and also on our X platform, Metropol CRB. If you did not get to watch it here live, you can get to watch the content later on our YouTube channel, Metropol TV Kenya. Now, you want to reach us later on, and as the CEO was saying, Cristobal is celebrating its 10th year. Please check out our social media platforms because we are about to splash goodies there you do not want to miss. But right about now, what you need to do to get our products and services, just dial *433# on your mobile phone, on your Safaricom number, *433#. You'll be able to choose from the menu the service that you need. You can also download our Cristobal app on Google Play Store. Just go to Google Play Store, search for Cristobal. You'll be able to get it, download it. At one click of a button, you'll be able to get any service that you want. But you can also talk to us. Our call center is open Monday to Friday, 7 in the morning to 8:30 p.m. Our phone number is 0709 834 000, 0709 834 000. We are also open on Saturdays, 8 a.m. to 2 p.m. But you also want to talk to us on WhatsApp? Not a problem. 0705 723 666. 0705 723 666. Talk to us on our website www.metropol.co.ke. I'll say that again, www.metropol.co.ke. You can write to us an official email, info@metropol.co.ke. So thank you very much, guys. We will see you again next Friday, God willing. Adios.